Now, yesterday alone, 180 billion worth of investors' money was wiped out of the market. Now, if you ask me, I can tell you this is pure manipulation. Whatever happening is manipulation. Now, you might be having a contra view, right? If you go and see yesterday's video, if you have seen yesterday's video, go and see in yesterday's comment. People tell it is a clear short. It is a shorting opportunity. You should have gone short. Market will go to 21,000, 20,000, 18,000, 17,000. So there are lots of arguments, or there are lots of criticism in terms of what we are using, what indicator we are using, what type of analysis we are doing. I'm not denying nothing wrong. See, for us order block is helping, for somebody else maybe order flow will be working, or for somebody else some other analysis will be working, right? I'm not saying it is wrong, but we are comfortable with order block. See, order flow, what we think about order flow, when we say, people say you have to follow order flow is a lagging indicator. Something has happened to the market, and after that order flow is telling you what has happened to the market. But what we are trying to do here is, we are trying to predict what might happen to the market without significant data. So when you try these kind of adventures, obviously you might go wrong. Nothing, we cannot do anything about that, right? So I have plotted something about today's price action in the market. And one more thing I will tell you, whoever was short in the market would have been in trouble today, because everyone was thinking that the market might go down. Even today morning, as I talk to you, time is around 3 p.m. As the market goes down, people would have thought market will go down. They would have shorted the market, they would have bought put option, and whatever they have bought would have been in loss, because this was a perfect trap, is what we are trying to say, right? Now there are many events in terms of US market today evening. We will talk about that. We'll also talk about Nifty, and we'll also talk about many things in this video. But before that, let me tell you, we have a membership program in our website, where we have a knowledge base of around 65 strategies, explainer videos, and a lot of content is available in our website. And it is not free, it is 200 rupees for lifetime access, community support. I'm not going to say everything is ready, you can go and you can access everything. We have around 65 strategies and explainer videos we are uploading one by one. We are trying to create a unique community forum. Everything is happening one by one, so give us some time. So if you want, you can join in our membership program, for which the link is on the description below. And we are planning to post webinars and whatever courses or whatever premium content we are going to put in our website is going to be discounted for members. And not only that, if you are not part of our Telegram group, we post daily market updates in our Telegram group. So whatever you are seeing here was posted today morning. So if you are not part of our Telegram group, consider joining our Telegram group. We do a lot of things in our Telegram group. Now coming back to the markets, now what we believed in terms of market, or what we plotted in this chart is, so this is the Nifty chart. Now we are having a 5 minutes time frame, or we are seeing a 5 minutes time frame. Now let me change this to a hourly time frame, so that you will get a clear perspective of what I am trying to say, right? Now if you can see here, I have explained this in a 3-step. The first step is before going into the first step, let me tell how institutions would have placed orders in this Nifty 50. Institutions or smart money, do not trade like retail traders. They need liquidity to enter and exit position efficiently. This means they manipulate price action to observe orders at the best possible level before moving the market. And we have talked about this in our earlier videos also. 2 days back we posted a video, in that we have mentioned clearly. Now what they have done here is, you can see here, there is a 3-step process which they have done. First step, initial institutional sell of which is a distribution phase, right? So the objective of institution here is offload large long positions at a highest possible price, induce a retail buying before making a moving the price down, create a fair value gap to leave behind inefficiency, and that is what has happened. If you can see here, when the market was at around 23,800, they would have they would have offloaded large long positions at the highest possible price, then and this is where many retail people would have gone long, right? So yesterday also they have commented, I was long in the market when 23,400 was going on the higher side, we were long and we are in loss, and even people were saying they are bleeding in yesterday's video. So if you are interested, you can go and watch yesterday's video. I'm not saying no, go and watch yesterday's video, go and watch yesterday's videos comment. Okay, now second thing what they have done is, how would they have placed order? Now when the market was at around 23,400, at around these levels, they would have placed which is a very good supply zone. Institutional sell aggressively into retail buyers, leading to break of structure. This creates a imbalance as price moves down rapidly without pullback. Stop loss liquidity from trapped buyers were observed on the way down, right? Now let me explain in a very simple method so that you will understand. You would have put a buy order here, you would have put a buy order here, assuming that the market will go on the higher side, and you would have put a stop loss order somewhere around 23,000, let's say 23,000, yeah, this is 23,800, but if you see the 5 minutes chart, it would have been 23,400 levels, or let's say 23,500 levels. Let me go to the 5 minutes chart so that you will understand clearly what I'm trying to say, right? Now here, when the market yesterday, when the market opened at 23,400 levels, which is around this area, here you would have placed a long order, assuming that the market will go on the higher side, and what we told in day before yesterday's video. Now here, this is where they have placed a huge sell order, and they are bringing the market towards around 22,800, right? Now we will go back to 1 hour chart, 1 hour time frame, and let us explore further what they have done, right? Now step 2, once the market, they have shorted, they have offloaded huge large position in a distribution phase, which is around 23,800 or 23,900 levels. Market is coming to around 22,800. Now the second step here, what they have done is, smart money induces liquidity grab at around 22,900 or 22,800. Now the objective is observe liquidity from retail stop loss and breakout traders, reverse the market after trapping the shorts. How they have placed order, let's say for example, they would have placed a buy order here. I am talking about institutions. They would have placed a buy order, a limit buy order here at around 22,900 or 22,800 levels. Then market drops significantly, triggering stop loss for retail traders. So what does that mean is, you would have thought that the market is coming on the downside, so you would have bought some put options, and you would have put a stop loss at around maybe 23,000 levels. So that is where liquidity grab has happened, right? The market drops aggressively. Now when the market reverses, your stop loss will be triggered and your liquidity grab has happened. And what retail traders we did wrong is, we shorted lately and got trapped in the market. We should have shorted the market at around these levels, but we have shorted at around this level, which is around 22,800 or let's say 22,300, so that we are trapped in this market. So if you see here, I hope you understand what I am trying to say. If you are not understanding, not an issue. Slowly we will try to make you understand. That is what the objective is. Now, what is a scenario? What might happen is the next question. Potential possible execution rate. Let's say smart money confirms bearish continuation. They want to be bearish. If a price falls if a price fails to break around 22,300 level, if it is not going about 23,300, which didn't happen. In fact, today after hitting 22,800, it touched at around 23,200, or let's say high was around 23,200. If it is not going above, or if it is failing to move above 23,200, now what they will do is they will trigger large sell orders to bring the price down, push the price back towards around 22,900 or 22,800, and that is exactly what they are doing now. Right now, as I talk to you, mark nifty is at around 23,978. Now, now once they do that, they will observe a retail stop loss for more liquidity. So once you have placed let's assume you have placed a sell order here, your buy order here, assuming that the market will reverse, you would have kept a stop loss at around 23,200, or let's say 23,300. Now your stop loss will hit, and still they will bring the market on the downside. Now let us say another scenario: smart money manipulates higher before dumping. They may push the price to around 23,300, or let's say 23,400, which is a very crucial resistance level. From there they will induce buying breakout, they will sell aggressively, inducing breakout traders and triggering their stop loss. So what we have to understand from all this thing is that you have to be careful in terms of market. Whatever levels we are seeing, whatever things are happening is complete manipulation, is what I want to say. If you are not understanding, let me know on the comment section below. We will try to make you understand, or we'll try to explain. In fact, we discuss these things in our Telegram group, for which link is on the description below. Now, apart from this, if you ask me what are all the other things we are having in terms of US market, we are having a very important data at around 7 p.m. today, which is core inflation rate month on month, core inflation rate year on year, core inflation rate month on month, and inflation rate year on year, and Federal Chair Powell testimony at 8:30. So today is going to be all event day in the US market. So be careful and try to hedge your position. Don't trade without hedging, and you will be in big loss, is what I would say. India VIX is not dropping. Trade war is happening. Trade deficit is there between India and US. So there are lots of proxies which can trigger the market on the downside. Or let's say if there is any good news in terms of PM Modi, if he is going to give concession on US imports, that might be a positive trigger, and the market may move on the higher side, is what we expect. So be careful. There are lots of binary events in terms of market, US market, and in terms of global market. There might be a domino effect. So whatever things which are going to come out today at around 7 p.m. are important proxy, whether US Federal Reserve is going to increase, pause, or decrease the interest rate going forward. So you have to keep this in mind, and make sure you hedge your position and trade safely. I have talked already around 14 minutes. I'll end this video here. I'll see you in yet another video. Till then, take care. Bye.